Good afternoon, students. Please confirm, am I audible? All right. So welcome back, guys. Yesterday we discussed about GDR in detail, but just we didn't have the time, and that's why I could not show you the notes on this. What I want is that before I go to the next topic, I wish that all of you should read these notes once and try to read the requirements of GDR issue first of all. I hope this material is visible to all of you. And I want to give you 5 minutes for this. Just let's have overview on this. Start reading. Start reading. Till this you have to read so that you can get the idea how the things are going. And once it is clear, I will go to the next explanation. Your time starts now. Please start reading this. Once the first page is done, type the word done. I will go to the next page. There are two pages about these 8 marks short note. Start reading, guys. If any difficulty, any sentence, any word, if you people could not understand, let me know. We will go in depth. Start. I hope it's done. Thank you, Mahima. All the students who have done this can go to the next page now. Thank you, Sriram. Start reading now the next page. All right, once it is done, so now we are going to the last concluding part of our membership chapter. Look, most of the parts we have completed. Now we are going for concluding part. Look at this now. It is talking about cessation of membership. Cessation of membership. Cessation of membership means how the membership gets terminated. How the membership gets terminated. Once the membership gets terminated, the member doesn't have any rights regarding membership. Like he cannot enjoy the voting rights, he cannot enjoy any kind of meeting rights, he cannot enjoy anything. Once the things are terminated, he doesn't have. But in the what circumstances membership gets ended? So there are a few circumstances are written. I'm just going quickly. If you could not understand any point, please let me know this. He transfers his shares to another person. His shares are forfeited. His shares are sold by the company to enforce a lien. If he dies, he is adjudged as insolvent and official assignee disclaims his shares. Redeemable preference shares are redeemed. Now this is a very interesting part over here. For sake of your knowledge, I want to ask that whether preference shareholders are members of the company or not. Preference shareholders, can they be considered as members of the company or not? Are preference shareholders members of the company? Answer will be absolutely yes. They are members of the company. So when preference shares are redeemed back, they are no more member of the company. He resigns the contract of membership on the ground of fraud and misrepresentation or a genuine mistake. This is very interesting. What if the company has allotted the shares to Shruti by brainwashing? Brainwashing in the sense, I showed a lot of dreams to Shruti stating that look, this company is very good and its future is very bright and you can double your investment within short span of time. So lot of promises I have made. So later on, if she finds that I got the money by making this brainwashing or just by manipulating her brain, it is considered as a fraud. And if she files the complaint, she resigns the contract, her membership will be deleted. His shares are purchased as per the tribunal order to by another person. So sometimes tribunal also gives the order that your possession is illegal, your possession is fictitious, transfer these shares to somebody else. And the moment when this order is given by honorable tribunal, you will lose your membership. Next is the member is a company which is being wound up in India and the liquidator disclaims the shares. This is also very interesting. Company itself got wound up. Company itself is a wound up. Now let's say I'm Reliance company and Kingfisher Limited, it is another company. In Reliance, Kingfisher has the investment, suppose. Now Kingfisher Airlines Limited becomes wound up. Its legal existence itself came to the end. Its legal existence came to the end. When its legal existence came to the end, nobody is ready to buy the shares. Nobody is ready to buy the shares. Automatically, membership comes to the end. Are you getting me? The company is wound up. Though one ceases to be a member, he remains liable to as a contributory and is also entitled to share in the surplus if any. This is very interesting point. Contributory. What do you mean by contributory here? Contributory. This is a very interesting question. Can anyone tell me what is contributory? I think this point had been explained very well in the accounting subject. I think by Sunil sir or Kritika ma'am. Who took your liquidation chapter? Have you done liquidation chapter? Not yet done. Okay. Let me tell you what is liquidation or what is contributory. Let's say guys, there is a company, total face value is 10 rupees. Out of this 10 rupees, 7 rupees are paid up. 7 are paid up and 3 is yet to be called up. So this is called the uncalled capital. Now suddenly the company decides to go for winding up. Can this 3 rupees be called up during the winding up by the court? Can it be called up by the court? Hmm? Obviously, yes, it can be. So, in this case, the honorable court will prepare one list. One list. List A and list B. Remember these two types of list. This is the list from whom the money will be recovered by the honorable court. Right? And these two lists, people are considered as the contributaries. These are the people who are going to contribute at the time of winding up, as per the contract. Now, what is the difference between list A and list B? This is very interesting. List A are the actual people who are holding the shares. For example, over here, Jayesh has transferred the shares in the name of Mahima. So if I ask you in the list A, whose name will be appearing? Jayesh's name will be appearing or Mahima's name will be appearing? Whose name will be appearing? Answer the question. Jayesh versus Mahima. Whose name will be appearing in the list A? Guys, I think my audio is not reaching you to you properly. Again, you please confirm. Am I audible properly? Am I audible? All right, because you people are not responding very much, that's why. Again, no problem. So again, who is the contributory? So right now as contributory are the people liable to contribute during winding up. This will happen in two cases when shares are uncalled or company is a guarantee company. I think all of you know that during the guarantee company, all the members, existing members, are liable to contribute to the extent of liquidation chapter is done, sir. If it is done, then why the other students are saying it is not done? Oh my God, it is a very great batch. What is happening? It is not done in CA. Yeah, I'm talking about accounts only. I'm not talking about law. I told you Sunil sir might have explained you in that. मैं accounts की ही तो बात कर रहा हूँ भैया. Yeah, whatever. It is done or not. Oh my God. Then all this stuff what I'm talking about right now, it was done in that advanced accounting chapter, right? List A, list B, contributory. I think all this concept had been explained if I'm not wrong. So who are the people coming under list B? So can I say those people who transfer the shares, it is done in CA Inter also. Fine, it is your debate because some of the members in this group, in this batch, say no, it is not done. Some of you are thinking it is done. So you discuss, you debate, and you decide. By the way, my point is you should have knowledge of this meaning, this word called contributory. What do you mean by contributory? Okay. So contributory is the person who is liable to contribute during the winding up. And there are two types of list A and list B. List A means existing members. List B means those people who transferred the shares 1 year who transfer the shares during 1 year before winding up. Before winding up. This is the list B. Now many students have this doubt, sir, why list B contains the transferor's name? All those transferors who transfer the shares within 1 year of its winding up. Why it is like so? So you tell me that today, suppose Mr. Sriram is the member of the company. He is the member of the company. He sold his 50 crore rupee shares. Let's say Mr. Sriram sold his 50 crore rupee shares to the party called Shruti. Okay, he sold his shares to Shruti. But the fact is, the shares were partly paid up. Partly paid up. Okay. What was the total amount paid by Shruti? Answer 50 crores. 50 crores paid by Shruti to Sriram. So according to this explanation, who is liable to pay the liability now? Simple question I'm asking you. Sriram sold his shares to Shruti. Shruti pays 50 crores to Sriram. Whose liability it is to pay now the remaining unpaid capital? So answer is Shruti is liable. Am I right? Hello? Shruti is liable. What if, guys, after investing 50 crores just within a month, Shruti gets to know about the news that a company is going for winding up and she is in the list A and honorable court can ask anytime rupees 10 crores. Can you imagine the total loss suffered by Shruti? She lost all the 50 crore rupees investment. She lost. She's going to lose 10 crores. So by this deal, she's going to face the 60 crores rupees loss. 60 crores rupees loss is very huge, and this is sufficient enough to make anyone insolvent. Anyone insolvent. And that is why over here the list B is prepared. It says that when list A contributories are not in the position to pay the amount, then amount will be called up from the contributories as provided in the list B. So you will be surprised during winding up, the rules are working differently. During winding up, the rules are working differently. So if list A contributories don't pay the amount out, then court will ask this money from whom? List B. In short, I hope students, all of you clear with the concept of contributories. Rights of members, I want to give you as homework. I do not want to waste my time in this. Just to simply read those rights. As far as these rights are concerned, nothing is asked in exam. So far, the rights are concerned. So far, the rights are concerned. So are all of the people clear with this? Hello? Are all the people clear with this? Come on. If you people are clear, type the word clear, students. Then I can go to the next question. Come on. So this is the end of your chapter called membership. All right. And now we are going to start with another beautiful chapter. Write down, it is charge. Charge. Please write down the contents. We are going to go in the chapter charge. First, write down meaning and definition of charge. Meaning and definition of charge. After then, write down here the kinds of charge, types of charge. After then, write down over here there are two types of charge. Anyone has any idea what are the types of charges? Hello? It must have been explained during accountancy if I'm not wrong. Very good, Jayesh. The first one is write down the floating charge. And second over here is the fixed charge. Very good, Manmo. Fixed charge and floating charge. The next point, write down crystallization. Crystallization. After then, registration of charges. Registration of charges. Then modification of charges or charge. Modification of charge. Then write down here the satisfaction of charge. These three, by the way, are the three different topics. Then register of charge. Register of charge. Here there are 2 points. The first one is company register, and second you write down ROC register. That's all. Copy this part and type the word done. Alright, I hope it's done. Fine. Then let's begin with this. The first point here is charge. What do excuse me, just a second. I'm extremely sorry for the inconvenience, guys. Okay, so let's continue with this. Before we start learning the provisions, let's clear about some basic concepts about this chapter. Basic concepts means what kind of terminologies we people are using while doing the charge chapter. So, do you know what is charge exactly? When the charge concept is applicable and how practically we can go with this? What do you mean by the term called charge? Anyone has any idea? Huh? What do you mean by charge? What do you mean by charge? All right. Look, basically, when you go to bank, suppose you want to buy the car. So car will be provided. Let's say you went to the bank for the loan. Will bank ask for any security or without security bank will issue the loan of the car? What do you think? Will bank ask for any security that gives some gold, give investment, something bank will ask as a security. Look, when the security is enforced by the company, then this concept becomes charge. So technically, the concept of charge is nothing but the security given in favor of the lender. Now listen to these two words. The first word I have used is the security of the company. What does it mean, security of the company? When I use the word here, security of the company, security of the company, simply it means that other than company concept, the term charge doesn't apply. For example, if partnership firm takes the loan and on that loan it gives its assets as a security, whether charge is applicable or not applicable, the concept of charge is applicable or not applicable? Answer the question. If partnership firm gets the loan from the lender, does he need to follow the charge chapter? Does he need to follow the charge chapter? Answer is no. Charge chapter doesn't apply. Charge is applicable only and only to company formation. No company, no charge. Write down over here. No company and no chapter of charge. So technically the charge chapter is applicable only and only to company. Second word if you use, I have used the word lender. I did not use specifically only bank. What does it mean? If the company has, let's say, bought the goods and the creditors don't have that much trust on the company and creditors are asking that if you want to get the goods on credit, give us the security. And company is ready for that. Company gave security of stocks. Whether charge chapter is applicable or not. Whether charge chapter is applicable or not. So look at this, the word lender is written, bank is not written. So lender can be anyone. He can be creditor, he can be bank, he can be any person who gives the loan, money, goods, anything, anything. Got it? Anything can be used over there. So the term right down over here, lender may be anyone. The term lender may be anyone. All right. So charge chapter is applicable only and only to whom? Company format organization. Now, what if there is a charge? What are the consequences? What are the consequences? If charge is created, what are the consequences? So look, according to the Companies Act, if you read the section 77, any charge created by company, it is compulsory for the company to register. To register. Register with whom? Register with ROC. It is compulsory for the company to register any charge created with the company. Now, many of you may have these doubts or we have never seen this charge. Have you ever seen charge in your life registered and reflecting on ROC website of any company? Let me show you how the things are going on. Suppose right now I have this website called MCA 21. Okay. In this website, if you go to MCA services, you will find this master data format. Then go to view company or LLP master data. After then, let's search about Reliance Jio or any other company. चलो किसी और कंपनी को ले लेते हैं. Any company you suggest me? Let's take Infosys doesn't have any loan. TCS I don't know. Reliance might have. Let's take Larsen and Tubro. Okay, in the name of Larsen and Tubro, there are a lot of companies. Let me go with the second one. And so when you just click on this, look, all these details are coming. I want all of you to focus on this word, charges. Please confirm, are you able to see this? What is written over here? Charges. Can you see this? Yeah. So look, all this amount is taken as loan. And according to the Companies Act, when you read the section 77, it is compulsory for the company to get it registered. Charge which is totally satisfied will get closed. So look at this. This charge got closed, which is not closed yet. That will be reflected as open. Look at this. Open, 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 like this. So this is very large company, as you know. All right. Against which property the charge is created. So these all properties are given as security. Immovable property, immovable property, immovable, 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 book debts. Then all that. Look at the amount of loan taken by the company against different assets. Oh my God, the list is very huge. Arre baap re. And this list is, I think, bigger than. Ori Baba, look at the amount that they have taken. 30,000 crores. 30,250 crores. It is humongous, isn't it? And the charge is still opened, I guess. These all are the directors in the company, as you can check it. Many people are here, right? So I wanted to draw your attention towards this charge word because this charge will be reflected over here only in the case when it is registered with ROC. So that is what is our chapter is all about. Let's understand the fundamentals of the charge, the types of the charge, floating versus fixed charge, which charge has the superiority over others. And at the end, very important question what we are going to learn with is how to register the charge, how to register the charge, how to modify the charge, how to satisfy the charge. And once this much we completed, our chapter comes to the end. Got it? Fine. Have you understood the overview about the entire chart chapter? Come on. Fine, guys. So let's learn about kinds of charge. Before I start reading the provisions and I start solving the questions, let's learn about certain basic concepts. So what is a charge? That concept we learned about. What is kinds of charge? So there are two types of charge. First is floating charge and second is the fixed charge. How will you differentiate between the floating charge and the fixed charge? How you people will differentiate about the floating charge and the fixed charge? So I have observed many students are believing that such floating charge means on a movable property and fixed charge means on immovable property. Is it like that? Floating charge means it is on movable property. Fixed charge is on immovable property. If this is what you are understanding, I'm sorry to say this is wrong. The interpretation is totally wrong. It's not going like that. ऐसे नहीं हो रहा है. ठीक है? Not going like. Floating charge is the different concept and the fixed charge, it is the different concept. How? Let's understand. Look, when I talk about the assets, security, there are two kinds of securities. Security number one, the borrower either is allowed to modify or deal with the charged assets the way he wants without the consent of lender. Okay, for example, you tell me, student, that when you buy a car or vehicle, now if you want to go for the service or if you want to modify or if you want to suppose you want to drive it, you want to ride it, do you need to take the consent every time from the bank? Do you need to take the consent every time from the bank that, hello bank, I want to go to JP Nagar. Should I use the bike? Should I use the car? Do we need to take the consent every time? No. Even without asking to the bank, we can deal with our asset. We can drive it, we can modify, we can go for the service, we can give it to our friend. And I have observed there are a lot of people who have sold their car even, who have sold their car without getting the consent of bank. So this is first kind of security. Okay, let me give the practical. When we create the security on goods, there is a condition that security is on goods, but without asking to the lender or the bank, or the bank, without asking to the lender or the bank, the person can sell the goods, he can buy the goods. So you try to understand here in order to deal with the goods. Consent of lender is not required in this kind of security. When consent of lender is not required, then this kind of charges are known as floating charges. Floating charges. Okay, let me give an example. Suppose I have a building. I mortgaged it with the bank and taken the loan of, let's say, 40 crores. But according to the contract, I can modify my building. I can increase one floor. I can destruct one floor. In order to increase one floor, in order to reduce one floor, I don't require the consent of bank. What kind of charge it is? If I am a company, answer the question. What kind of charge I have created? Floating or fixed? The answer would be, in this example, it will be floating charge. It will be floating charge because in the floating charge, the consent of company is not required. Sorry, bank is not required. But that kind of security, which is here, the security number 2. All right, this is here security number 2. Every time if you want to do even a little bit thing in your property, even if it is in your possession, you can't do this without consent of the lender. That means if the property cannot be modified, deleted, or added without the consent of lender, and this kind of charge is the fixed charge. This kind of charge is the fixed charge. Now you tell me floating versus fixed charge, which one is more strict in nature? Which one is more strict in nature? So obviously, fixed charge is more strict in nature. More strict in nature. Because if you want to do alter a little part of the property, you cannot do that without asking to the banker. So now there's a question. Suppose there's a company and company has the goods in the godowns amounting rupees 10 crores. Goods in the godowns amounting rupees 10 crores. And there's a fixed charge created. Fixed charge is created. Can this company, without asking to the bank, sell or buy new goods into the godown? Can he alter existing quantity without taking the consent of existing lender? Answer will be no, because this is the nature of fixed charge. So one thing should be clear, write on the note for your exam here. One thing should be clear. What is that? That charge doesn't depend on types or nature of assets, but it depends upon the terms of the contract. But it depends on the terms of the contract. All right. Now answer the next point is the priority. Priority. My question is floating charge versus fixed charge. Which one is given highest rank or more priority? Answer the question. Fixed versus floating charge. Which charge is given more priority? More priority or superior rank? Superior rank. Okay. Let's take an example like this. For example, company is going of winding up. Total amount created, total amount realized is 10 crores. This is the total assets amount realized in cash. Now in the balance sheet, 10 crores are fixed charge holders and another 10 crores are floating charge holders. My question is who will be paid first? Whether fixed charge holder will be given the first priority or the floating charge holders will be given the first priority. What do you think about it? Floating. Floating charge holder will be given the first priority. No. Answer to this question is write down fixed charge holder will receive the priority over floating charge holder. So this 10 crores will be paid first of all to fixed charge holder, and if the amount is left, then there is the turn of floating charge. And if there is no money, floating charge holder will not get any amount. All right. Write down one more another note about this. During liquidation, rank will be as follow. Point number one, you tell me who will be paid first? Secured creditors. plus labor charges will be paid first. So secured creditors and the labor will be paid first. And these secured creditors are nothing but fixed charge holders. So fixed charge holders are always given the highest priority in the payment while there is liquidation, while there is winding up. After paying secured creditors, if money is left, then there is the turn of preferential creditors. Preferential creditors. What do you mean by preferential creditors here? So these are the creditors like employee of the salary and the governmental dues like GST spending, income taxes spending. These kind of things would be covered up in the preferential creditors part. After paying preferential creditors, if some amount is left, then there is the turn of right on floating charge holder. After paying to the floating charge holders, if still some money is there, then there's the turn of unsecured creditors. That is creditors for goods and all that. After then, there will be preference shareholders. And if still there's money left, then there is equity shareholders. This is the payment priority during the liquidation, during the winding up. I think in liquidation, this rank was explained to all of you, right? In detail, I hope. समझा था ऐसा कुछ रैंक वगैरह? Yeah. So never make this mistake that what will be paid first, what will not be paid first. Please understand this and look, all these point will be helpful while understanding the provision. Copy this. Done? All right. So till this everyone is clear what is a floating charge and what is a fixed charge. Write down the notes on that if you want to. Fixed charge versus floating charge. Just a second. I want to dictate it. Better you write it so that you can maintain the rhythm. Okay. Okay, Mahima has a doubt. Then what is the benefit of floating charge for the lender? How many of you have this question? What is the benefit of floating charge then? Because fixed charge in all the ways better than the floating charge, then obviously everyone should go for fixed charge. Why then bank goes for floating charge? They can charge more interest. Another thing is lending business don't think that only lender has requirement. It is finding the good customers is the requirement of bank as well. Do you agree with this? Bank is also in search of the good customers whose credit score is very good. So for those loyal and good customers, their conditions, their terms can be little bit liberal. No problem. But still, instead of unsecured, floating charge is better. You are talking about floating charge. Certain lenders are giving unsecured loans and they are charging 18%, 20% interest on that per annum. So something is better than nothing. So I know that floating charge has certain terms and conditions a little bit lightweighted, but still security is security. Let me tell you what is the risk involved in the floating charge. Let's say suddenly the bank realizes that a company is not good in the payment. Company is not good in the payment. Company is not good in the payment. It was a floating charge. Total floating charge created was 10 crores. Suddenly, the bank will issue a notice, legal notice of course, to the company that we want to seize the go down goods. The go down goods. What do you mean by seizing the go down goods here? Huh? Seizing the go down goods means whatever goods are there now will not be allowed to be utilized by the company until bank permits now. So earlier there was floating charge, and if company is not good in the payment, the bank has the right to apply the floating charge. Apply the floating charge. Now the point is, if there is 12 crore rupees goods in the godowns, how much amount can be recovered by the bank out of this total amount of goods? Can I say 10 crores? Simple Ray, loan was given for the 10 crores when the goods had been seized. Total valuation was 12 crores. If the company is not paying the amount, what bank can do is bank can auction these goods and can recover 10 crores. Yes or no? Out of the goods. Is this example clear? Total loan was given for the 10 crores. It was a floating charge. When bank seized the goods, it was 12 crores. If company is still not paying the amount after this seizure, then bank has the right to auction this 12 crores and recover this 10 crores. Are you clear till this? Type the word yes or no. Are you people clear till this? Type the word yes or no. Okay, what will be your answer that instead of 12 crores, go down contains only 6 crores? Go down contains only 6 crores. Then how much a bank can recover? How much a bank can recover? Answer would be bank can recover only 6 crores. Then what about the remaining 4 crores? Then the remaining 4 crores automatically becomes what? Automatically becomes what? Not a loss of 4 crores. It becomes no, not a bad debt, unsecured creditor. Kya re? The goods are not sufficient. It becomes bad debt. Sriram, Jayesh, what kind of logic it is? Goods are gone. Company is not gone. Ayyo Rama, what you people are thinking, Ray? Don't be sorry. Have you realized what I'm trying to say? Company is not wound up yet. I'm saying just the goods are not sufficient when bank exercised the right to take the goods. All right. In short, I think Mahima's doubt was why there's floating charge. Something is better than nothing just by following that theory. This rule is made. I hope it is clear to all of you. All right. Write down, or let me put it over here. All right. Copy this. This is about the fixed charge. Let me put it is about fixed charge. What is written? A charge is called fixed or specific when it is created to cover the assets which are ascertained and definite. Generally, a fixed charge is a security in terms of certain specific property, and the company gives up its right to dispose of the property until the charge is satisfied. This word is very important. Company gives up its right to dispose of. So dispose of means company cannot sell that property until the charge is satisfied. That means until the charge is closed, until the full payment is made, property remains in favor of the lender. The company can deal with such property subject to the charge so that the charge holder's interest in the property is not affected. So guys, if it is affecting the lender's interest, company is not allowed to do such activity. Okay, a little bit technical language is used, but I hope everyone is clear to this. Okay. All right, write down the next one is about floating charge. Copy this. Read these two types of charges and once it's clear, let me know that. Sriram, crystallization part I will tell you later on. You complete this much part first of all. Are you clear till this? Confirm that part first. All right, can you go? Okay, Jayesh has a doubt. What about overriding preferential creditors? Okay, you understand overriding creditors are those creditors who have the preference above everyone. Above everyone. For example, labor, workmen's due, or secured creditors. Can I say these are the preferential creditors but having first priority above everyone? Now, fixed charge holders are themselves considered as the secured creditors. So, look, if you look at this particular rank, as I told you, secured creditors, the definition of secured creditors itself includes fixed charge holders. So, you cannot say that fixed charge holders are different from secured creditors. Secured creditors. Are you getting me? Jayesh? When we prepare the list of secured creditors, fixed charge holders are automatically get included in that. So see, this what I can say, fixed charge holders are overriding creditors against the floating charge holders. Against the floating charge holders. All right. Next, understand the new topic, and new topic is about the crystallization. Now, what do you mean by crystallization? Anyone has any idea what do you mean by crystallization? Let's try this. Guys, please confirm. Can you hear me? अरे यार, now where I was, yes, this one. What do you mean by the term called the crystallization? Crystallization. So understand, if there is floating charge, every floating charge has certain conditions, contractual conditions. What if these conditions are not satisfied? Let's say there's a bank, HDFC Bank Limited, and this bank has given loan to, suppose, Neha, and goods worth of rupees 20 CR was considered or taken as floating charge. Total loan taken was somewhere around 15 CR. All right. What if Neha does not pay the installments regularly? What bank will do? Bank will simply issue a notice and will inform the company that now don't move the goods without written consent of bank. This is what exactly happened in the market, and this is called the goods got seized by the order, seizure. So you tell me, guys, already there was a floating charge and you people have made the mistake, and just because of that mistake now the company cannot use the goods the way it wants, but in order to use this, every time it needs to take the consent of a bank. Then whether charge is floating anymore, it becomes fixed. Answer the question. Charge is floating anymore because now same rules apply. If you want to sell it, take the consent of bank. If you want to add it, take the consent of bank. If you want to destroy this, take the consent of bank. So guys, the process when floating charge gets converted into fixed charge, that is known as crystallization. That is known as crystallization. Okay, is the concept clear? Hello? When floating charge gets converted into fixed charge, that part is known as crystallization. That part is known as crystallization. Now in the crystallization, there are two important points. Write down. Crystallization just a second, student, just a second. All right. Now, if the situation is other than winding up, then the impact will be different other than winding up. And if it is winding up, the impact will be different. Actually, what happened right now, I got a complaint from this my apartment a neighbor that somebody parked their vehicle in the basement and it got stolen. Somebody theft it. Now, unfortunately, those CCTV cameras they had some problems. So that was the little bit discussion. I'm sorry for the inconvenience. Be very careful. Be very careful. All right, let's continue in this. Other than winding up and winding up, why crystallization is different in this too? You tell me, whenever the floating charge holders come to know about the company is going for winding up, what will be their reaction? Will they wait or they will instantly go for crystallization? If there is news of winding up that so and so company is going for liquidation, what they will do? What they will do? Logically, what they will do? It is common sense. The moment when the news of winding up broke up, everyone will everyone will that's what everyone will run to make it crystallized. But if all the floating charge holders will convert into fixed charge, don't you think it is the emergency situation? Money is very less. It would be very much difficult in distribution of the assets. What do you think about it, students? It would be very much difficult. And that is why, guys, the concept of crystallization does not apply during winding up. It applies only during the normal situation. Are you getting my point? So whenever there is winding up situation, everyone will rush after it. I convert my floating charge to fixed charge, convert me to secured one. Everyone doesn't do that. I hope you're understanding what I'm trying to say. So crystallization is winding up only during the winding up. Sorry, other than winding up situation, you can go with the crystallization. Otherwise, you cannot go for that. And what is the process? You just apply it to the company as well as to the ROC that we want to exercise crystallization. And now the company is not allowed to deal with its property without the lender's consent. Now, basically, there are two parties. Okay, this point is clear. Other than winding up versus winding up, so crystallization is allowed. That's what is the conclusion here. And winding up during the winding up, it is not allowed. It is not allowed. Fine. I hope it is clear. All right. Okay. Now, parties in the chart, there are two parties. There are two parties. There are two parties. Party number one is the company itself, and party number two is the lender. But lender technically is known as, right down over here, charge holder. So please do not get confused. In exam, guys, whenever the word lender is used, charge holder is used, we have to consider this as a creditor. He can be bank, he can be other than bank as well. So generally we don't use the word like lender or giver, not like that. It is the charge holder, the person in favor of whom the company has given the charge. All right. Now another question is, what is the role of Companies Act here? Role of Companies Act. This is very interesting now. Role of Companies Act. Now from this point onwards, the real provisions are starting. What law says that charge will be effective only and only in the case when it is registered with the company, registered with the ROC. If it is not registered, it is not effective. Right now, charge will be effective only if it is registered. Charge will be effective only if it is registered. Otherwise, it is not registered. So write down, guys. It simply means that unregistered charge means no charge at all. Unregistered charge means no charge at all. I hope it is clear to all of you. Now, what are the actually provisions on how the registration will happen? What forms? Look, now in this point, what kind of questions you're going to face with? So before I start the discussion, I want all of you to focus on the different questions. Look at this. These are the questions what they can ask in exam. Are you able to see these questions? Okay. What is the concept of charge under the provisions of the Companies Act? Point out, don't ignore this 1956. Okay, there is no more 1956. These are the old questions. That's why I have taken 1956. Point out the circumstances there under floating charge becomes fixed charge. So this concept is about what? Crystallization. What do you mean by floating charge? And again, the same question. Characteristics of the floating charge and when does it gets crystallizes? What do you understand by charge? Distinguish between fixed charge versus floating charge. What do you understand by the term floating charge? State the circumstances when it becomes fixed charge. Define the term charge and also explain what is the punishment for default with registration to charge as per the Companies Act 2013. So from here, registration point is started. While sanctioning the working capital limit of a company, the rate of interest has been fixed at a specific percentage above the bank rate as notified by the RBI. There was a change in the interest rate due to RBI notification issued later. The bank insisted on filing a return of modification of charge. Is the stand of the bank is correct? Explain and discuss it is in the light of the provisions of the Companies Act. All right. Next is Mr. Antriksh entered into an agreement for purchasing a commercial property in Delhi belonging to, guys, are you getting what kind of questions? This question is about the modification of charge. What this question is trying to say? Mr. Antriksh entered into an agreement of purchasing a commercial property in Delhi belonging to some other company. At the time of registration, Mr. Antriksh comes to know that the title deed of the company is not free and the company expressed its inability to get the title deed transferred in the name of Mr. Antriksh, saying that he ought to have had the knowledge of charge created on the property of the company. Explain with the help of notice of charge provision whether this contention is correct or not. RTP May 17. This question belongs to section 83, notice of charge. This question is about the registration of charge. Registration of charge. So in most of the cases, if you look from this point, membership concept is started. Till this, guys, if you look at charge chapter contains the questions of procedural more. They are going to ask you the procedures the more. What is the procedure if you want to register? What's the procedure if you want to modify? What are the differences between charge versus floating charge versus fixed charge, and what do you mean by crystallization? So these kind of questions are there. So are you people ready with this? Tomorrow we are going to start with this. Come on. Okay. Hello. Okay. Good luck. So this was today's is just the basic introductory part of charge. From tomorrow we are starting all the sections along with the procedures, shortcuts, how to remember, how to memorize long sentences, and we'll close this chapter. Thank you. Okay, any doubt till this? Any doubt till this? Yes, Shamika, we are going to do that. There are certain circumstances under which it can be exercised. We will do that. Don't worry.